So we're going to do a top-down analysis of the Volatility 100 index market, and I'm going to be starting my analysis from the monthly time frame, which is the highest time frame. And I'm going to be doing this because I want to see what the market is doing on the higher time frame. It will help me to make better decisions. So without wasting your time, let's get right straight into it. Now, as you can see, we're on the monthly time frame, and currently the monthly, generally speaking, is bearish. It is bearish because look at market structure. Market was breaking lows. See, market broke structure to the downside. And the moment you start seeing a downside wick, you should know that on the higher time frame, there should be some retracement. Okay, so let's see what the market did right around, let me get my rectangle tool, right around this long wick. Let's go down to the weekly time frame. You see right there, see market broke, or rather retraced to the upside. Now looking at this weekly time frame, we have a better view of market structure. What market was doing right here, breaking structure to the downside, retrace, break structure, retrace, break structure, and currently we are in a retracement phase. But let's look at the monthly time frame once again. On the monthly time frame, now this retracement is actually a bullish market structure on the lower time frame, because look at it this way. Throughout this whole month, markets printed a bullish candle, and you can see after this month closed, this current month of January, you can see the long bullish candle. So now let's go back to the weekly time frame. On the weekly time frame, I'm going to map my market structure. This is my swing high, which is my protected high. This right here is my break of structure to the downside. Let me quickly write that. This is my break of structure, and this right here, okay, let's reduce that. This right here is my swing low. Now this is the low I am expecting that market will do some things right here and break, so we can continue to the downside. But then, like I said, this retracement is a trend on a lower time frame. Now, multi-time frame analysis helps you to have a better view of the market. Let's go down to the daily time frame. Beautiful, beautiful, beautiful. Now, this is what I will do every morning before I start taking my trades. It helped me know what to do for that day, whether I should be looking for buys or I should be looking for sales. Now, can you see on the daily time frame, market broke structure to the downside right here. Definitely we were waiting to sell from this range, but what happened? Market broke up to the upside. That is what the retracement on the monthly and weekly time frame cost. So this is a trend on a lower time frame from the daily time frame. So after market broke structure to the upside, now we shall be looking for buys. If we were present when this happened, I will be looking for buys. Now look at this demand zone right here. Just look at this demand zone. Market came down, respected it, and continued moving upwards. The market held and it kept moving upwards. Broke this to the upside, retraced, broke again to the upside. So right here, definitely anybody that was here should be looking for buys. But something remarkable right now is happening. For instance, I will be trading Volatility 100 tomorrow, but I will be careful. I would be very careful. And now what I want to do is I want to go back to the weekly time frame and see where are we at in the weekly time frame. See, currently we are in this supply zone. Look at this. We have another supply zone right here. So that explains why this market is behaving the way it is. See, it's basically struggling to push past beyond the zone. I'm still keen on buying, but I would be very careful because market can reverse on us at any time. But for now, we are still bullish. So I will mark my break of structure to the upside right here. And this is my range low or my protected low. Okay. So now I will go down to the H4 time frame to have a clearer look of what is going on in the market. On H4 time frame, you can see this is a break to the upside, and this is another break to the upside. After it broke, market moved down and respected this. It respected this demand zone. Okay, you can mark that one, or you can simply mark this one since it's width below. Okay, this is perfect. Respected this one. So right now we are headed for this high right here. Okay, so if you got an entry right here, of course if you were on this market at this point, you should be looking at the M15 time frame, and we actually got a perfect entry right here. Let's zoom in closer. You can see what happened right here. We had a break of structure to the downside, retraced, broke to the downside again. This is the M15 time frame. Then it broke structure to the upside, telling us that market, the retracement has ended. This is a very beautiful trade. As you can see, it's a very beautiful trade. Let's quickly mark that zone right there. You can see this zone. So market respected this perfectly. Let's look at the M5 time frame. I'm just showing you possible way you could have taken this trade. This is the M5. Let me use the M1 rather for a clearer view. Oh, perfect. Very perfect entry. Trust me, anyone who knows how to read market structure would have caught this trade very easily. Very easily. Now, this here is just to confuse you, but this is where the shift happened. And after it shifted, this is M1 time frame, so you could as well enter when the market touched back at this point. And you can see, if you took this trade by now, you should have taken some partials, taking something off the market. I am not a fan of holding all my positions to take profit. I like to set some take profits, maybe at 50% and 75%. Look, this is Volatility 100 index. It's a highly volatile market, and this market, no matter how beautiful your analysis is, this market can actually spike the opposite direction and wipe you out, wipe your account out. That is why it is very important to always take something off the table, and also ensure that you practice very good risk management. So right now, let me see what is going on the 15 minutes time frame. The market is actually respecting structure. See what happened right here. After you got your entry, market broke structure to the upside. It retraced to this point. As you can see, not even this point, it actually took out these two liquidity right here. That's the problem with continuation trades. it's better you catch a trade from the very bottom and ride with the trend. It took out this liquidity. Let me change this line to red. This line shows that some stop losses were resting below here, and market took them out and moved upwards. You see what's happened right here? Respected the supply zone and started moving upwards. And as you can see, we are looking for markets to break this high right here. It could possibly break this low, and when that happens, we will likely be going down. Now, this is how you do a clean multi-time frame analysis on volatility pairs. Volatility 75, volatility 100, they actually respect market structure, provided you know how to read market structure. Okay, if you find this video helpful, why don't you subscribe to our channel and do turn on the bell icon so you can always get updated each time I drop a video. Thank you, and see you in my next video.